Form your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, got an email from someone saying, are we ready to sell cattle? Well, I thought we would be, but the fact that hogs have jumped and we're up on the day here, closing at the end of the day, the pattern should have closed at 117.25. It's a Friday and an up week, and the cattle cash market is el fuego. It is on fire. You can see here yesterday it jumped 4 cents. Today it's up about a penny, but it'll top up in here. It'll give us some chance in here, folks. You know, after we have a break, we always have a 382, so we'll be okay. So let's move on to something else. Now, someone gave a very, very interesting question to me, and I want to try to answer it. It's about the cycles and the A word. Okay, the other day I was on the show here, and I showed the Bradley dates for the whole year. Now, you remember the top was right there. That was right there. That was November the 27th. Now, it was inverted, okay? And then we had supposedly a bottom coming in on March 25th. The bottom didn't come in until April the 7th, and you don't see April the 7th anywhere in here. It was not a Bradley date. That happens, folks. The way I got started doing this stuff is when I saw these major dates, like the whole thing started when I started researching this stuff with 20-minute Dr. Miller, was from the 1974 bottom. We had a double bottom in October. That's the one that took my money. And then we had another bottom in December. They were both the same. The Dow was around 700. It had been around 1140, came down to 700, which was a 50% retracement. And from there, it's never looked back, and it still never looked back. Okay, now, since that time, I went and checked all those dates that were here. And folks, they are really, really good. Now, if you look at these dates, we've already pointed these out to you on some of the other charts that we looked at. So we've got a big one coming in here. This is around the 10th or 12th. This is over the weekend. So sometime around Monday or Tuesday, look for something really big to get ready to happen, and we'll see if it works. All you do is you match the pattern, you know, with the time, and that's what you're trying to do. But folks, when these markets, you know, stop and think yesterday, folks, we made a 90 handle break in the S&P and then rallied 120 handles today. I mean, that's not for the faint of heart. So you can't stand in front of that stuff, and that's why, you know, we had 2 losing trades today. One was in the hogs, and the other was in the the hogs are still going up, I believe. No, they're backed off just a little bit. The cattle are still going higher, but there's the hogs. They gapped up today at 5, and then they rallied a 1.5. Our stop was right there. And that's, so we're out of that. We don't have to worry about that. Okay, now you can see the soybeans acting really nicely. Soybean oil is acting nicely. Soybean meal is acting nicely, and so is the wheat. So those are all working good, but the ones that have really been good for us have been the short in the U.S. Treasury bonds, and you can see they're still dropping. And this makes up for both of the losses in the hogs and in the Russell, because the Russell lost about 800, and the hogs lost 500. That's 13. This one's made 15 just by itself. And then when you looked at what the euro has done, it's well up, way over $1,200 here. So that's moving pretty good to the downside also. So that's the main thing that I try to keep. One thing I won't do, folks, is I'm not going to sit here and, you know, buy or sell something and then, you know, and wait and see if it ever goes down. I'll take some pot shots on the short side of the stock market, on the long side of the stock market, but I'm not going to sit there and hold it for 3 or 4 days. I put $1 stop in. I learned that from many years ago when they told me at Drexel, our customers are used to making money. Our customers are used to losing money. The one thing they're not accustomed to is losing all their money. And if you lose 25% of their money, find another job or go back into pharmacy is what they told me. So anyway, that's what I try to do here as I'm doing this each day here. We had a major top, remember, in silver, hit that 36.50 level. level. We had a major top in a platinum. I think you should see platinum because it made I had earlier. Let's just double check. We'll get up here because I don't trade platinum, but remember it's 1/3 the price of the. Let's get up here. Here's P is platinum. Where are you? Platinum. Come on now. Here it is right here. Okay, we'll get platinum up here on the daily chart, and then we're going to put it up here. Yeah, it did. As you can see where we went, we hit the exact 1.618 expansion of this move right back here. And that, if you looked at this on the long-term weekly chart, it's also made a little above the 61% retracement right in here. So this is where we should stop to roll over here in the platinum. It's still up today with gold being down, and gold has been rolling over for several days here. So that's the main thing that we're watching. Someone asked me another question about short-term trading, and basically, folks, when I set up my trades, it's what I give you in the videos every night is what I'm really looking at. You know, those are the ones that, you know, really, and sometimes they work, sometimes they don't, but it's like everything else, you know. We try to be right about, 2 out of 3 times, which if you follow this stuff, you'll be pretty close to 2 out of 3, and your payoff is going to be better than your losses. So that's why pattern recognition works the way it does. And it works on shorter term time frames just like it does longer term time frames. So that's what we try to do is when we line these up to see it. So that's it. Okay, now we'll move up here. Here's to give you an example here in the hogs. If you remember, this is one I like the best, folks, because it had everything going for it. Look at it. This was perfect, right? It backed off here. The most we had was about a $500 profit. Bang, we got stopped out right there. So not much I can do about it. What I'll do now is I will wait here Monday, Tuesday, because these markets, they tend to see not go up to ever. Yeah, maybe it'll go up a lot more, but what I'll do is I'll wait for it and wait for that little 382 retracement, and that's the one I'll be looking for, and I'll be watching it very, very closely. Okay, now someone's asked a question about Apple. Let me get it up here. I don't even know why I don't even put it in there automatically, because that's the stock that everybody likes. I can't understand how people are actually, after all these years, they're downgrading it or not using it on their watch list or something. Well, it's not acting well compared to the rest of the market. As you can see here, it's had a rally here for 8 days, and it can go nowhere. It goes from 95, it rallies 10 points, and Apple here, rallied 30, 40 points. There's just no interest in anybody wanting to buy Apple. Now, I hate to get into the love fest over there in Washington, but we might have to look at Tesla. Folks, I cannot believe 2 human beings can act like children, but, what am I knowing about this stuff? So it's politics. Okay, here's Tesla. It was supposed to be up today, and it's had a pretty good move. You can see here, it's actually done very little. There was yesterday's action. Today we gapped up. And we gapped up in the middle of the day, see, and then we went down and made a low, and then we rallied back. If we look at this on a smaller time frame, you'll see what I mean. See, there was the move, and then it pulled back right here. That's just for kicks and giggles. It's usually exact 382. And if you put that in there it is right there. So there's at 91, and that's what's happened. So we're going to take a break here, and we want to look at some currencies because that's where the game is being played, my friends.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the British pound. Came very, very close to our target, within 30 pips. You see we backed off quite a bit, very little compared to the others. You can see on the hourly, it's down just about 100 pips. The euro has dropped quite a bit, as you can see. And then if we take a look, there's your euro right here. It's been the easier. In fact, this is the easiest one to trade of about any. Well, you would see all these little ABCD patterns in here for people that want to learn how to trade. This is the one to work with. And you got many euros too that you can use, but it does a good job as we watch these things. Remember, when we were watching this on the hourly chart, we had a strong indication that this was going to be the high. See right there, there was the high. There was your first 382. There was your second 382, and now you're still heading down. These are good moves, folks. This from this level right here, that's well over $1,200 in a matter of just one day. So that's what we want to be seeing. Now, as we look at the euro, you'll see the low we made back on the 29th is back here. There's the 382. We've come down here. We're staying here right at the 382 almost all weekend long, and we got the weekend coming up here. This today, and so we'll see what happens on Monday. Right now, it still looks lower. We did have that last ABCD that took it up to a new high ground, and you've already pointed that out in a previous video. Went up almost exactly to it, and that's where we're moving to, what we're looking at right now. I had another email question today from a new trader, and they said, how do I handle a string of losses? Very delicately, folks. And I do have those. I had a loss here in the euro today, in the hogs, and also a loss in the Russell. But at the same time, I was having big profits in the euro and then also in the British pound. Also, soybeans were working well, and the wheat was working well, and the soybean meal was working well. So everything overall was doing pretty good. But I got rid of the losers right away. Well, the hogs not so long, took $500 out of me, but the Russell was that was the one that surprised me the most, because I really thought, and I knew I had a problem, and I'll show you why. Well, I should say we had a problem. Here's the Russell. I'm going to get it up here on the hourly basis. Okay, there's the hourly chart right here. Now, yesterday, okay, this was yesterday. Today, there's yesterday's action. Then you see today, we went up and we took out those highs, folks. That was the first sign that, wow, remember, that's where that's soybeans. Gosh darn, what am I doing? We bought the soybeans down here. That's where they are right now. So stay tuned. They're going to go higher. So let's get the chart up that matters here. I know what it did. It's right above it, and I hit the wrong one. Okay, there's the hourly here for the Russell, and you'll be able to see. There's what we were looking at. You see, we had that 78. Shucks, get out of here, soybeans. Okay. There's the Russell right there. Okay, now we said to sell it right here. Then we had that huge run here, up and down. Look at that, folks. That's 40 or 50 points. No, 30 handles in the Russell. And that's why, we went above here. I said you can't be short. Last night, look, we had that big break. Okay, we dropped $2,500, $1,400 we dropped, and then before we come in, there's where we were standing. Then the report came out, and boom, and there's where we said goodbye, right above that. So that's where we lost $1,000 right there. And, I got to keep the loss as small as I can, so I'll look at it again. But that's what I did. Okay, now I just wanted to go through the ones that we're watching. So to get this out of the way here, another one we had that's been doing very well. I didn't give an official buy or sell on this, even though I suggested it, and that is in the Japanese yen. And we'll bring this up, and you'll see that it started to do its thing. And there you see, there's where we were. Okay, and you can see the last couple of days here. Whoa, get this up here. There's where we are, right in here. Now, we came down here, and you notice here we made a little bit higher bottom right in here, okay? And so what we were looking for is the market would most probably have this move down. That gives us an A, B, C, D to the upside. That's saying that the dollar is strengthening, not weakening like we think. And there's where the dollar made its low, right, is down here. So he's looking for a place to be a buyer, which would have been right here at the 786. Okay, that would have been a day or two. By the way, everybody that's out there that believes in higher power and has white light, please send some white light out to my good buddy Jim Twentyman. Today would have been his birthday. He would have been 79, folks. So we lost him last year, and that hard to believe it's been over a year. But today was JT's birthday. He really loves celebrating it because it was before D-Day, the day before D-Day, and his father was part of going to Omaha Beach along as one of his uncles, so it was a big deal. Now, as we look at this on the Japanese yen, you'll see we're sitting almost exactly at the 61% retracement now. In fact, that's where we are. Well, just a tad above it. You can see we're sitting right there, but it looks like it still wants to go higher. So that's it. If we look at this on a really small time frame, because when you're trading, you need to do that, this will give you a pretty good idea. Let me show you. There's the bottom here yesterday. Okay, there's the big bottom that we had. Okay, now here was the easy trade right here. You see how, folks, this has taken 6 hours to do this, to back off that far. Now, if you're looking at this and you start looking at ratios, you got to look at 382. So your first one would look at the 382 off of the real bottom back here, okay? And there it is right there. It stays there for 2 solid hours, folks, and then starts up. That's telling you that something's happening in the Japanese yen. Now, look at it again. This is these are a lot. This is serious money, folks. This when it moves from 43 to 44, that's $1,200 large, $1,200. Look at this. Then the market goes up and has this little pullback. All right, watch this little pullback. See where it stops. Oh, this is 50%. Then we have another one right here. This is the report. The report came out today, and then bonzo away it went, and it's going higher and higher. But that's what it was doing, just following these numbers, and that's it. We had a big pullback here. Let's just show you again. Let me refresh my defaults here. Where is it? Here it is, right here. Okay, now get this out of the way. And we had a big run here, and then we had the pullback. Watch what the pullback did. Probably 382. Exactly. There it is right there. So that's why 382 is so powerful, folks, in strong trending markets, because it really gets you moving in the really strong direction of what you'd like to be seeing these things doing here this morning. Now, we've had a little sell-off in the market. Now we're bouncing back. Let's take a quick look here at the YM, because I was watching this earlier this morning, and I'm following it along with my AI program. And it's, here's where we're going to get into trouble, folks. Looks like we got a little bounce coming in here right now. And as you can see, there's where we are right now. Well, we might as well get into real trouble since we're here doing live. We'll just see if we can figure out what that 382 is going to be, and maybe we'll take a little bit of a small one here. Yeah, another 50 points here. So I'd be a seller right here, folks, at the 382 for two reasons. One, you're going to be below the opening, okay? Well, you're going to be right at the opening. The opening is right there. So you're going to be right at the opening. So that's an iffy diffy. Here's the report. That's not a bad trade. So the trade here will be to sell it at 4275. Let's just, yeah, I'll put this in. I think the time to come 42750, and you're going to risk 50 points. Let's take a break here. I think we're on a break time, or yet? Yeah, we're on a break time now. We're back in just a few minutes, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we've got our energy specialist on this line today, Mike Moore of More Analytics. Mike, how are we doing today?
How are you, Larry? Thank you for having me on. I appreciate it.
Hey, it's our pleasure. Tell us what you're looking at the energy complex, my friend. Start out with natural gas, if you could. I've had several requests for that today.
Okay, can you see my screen?
Yes, sir. Coming in great.
Okay. All right, natural gas. We're popping up today. We've been bullish from a couple different levels here. I don't know if you can see this on my screen.
Yeah, it's
the
coming in
trade back
clear.
above 351.40. That was the break back above this line, got us bullish. We'd seen 277 ticks coming into today and a little bit more than that. And then the trade above 370.80 projects this upward, 350 ticks plus. I'd actually shade that. That should be about 300 ticks plus right now. That was the break above this line. We've traveled down it, tried to get the stop, couldn't stop it out, and now we're starting to see some of the projections. If we were to fail back down through this line decently, that would warrant a decent pressure. That's going to come in at 363.30. And just a reminder to those of you that are watching, when I say decently, that's not some broad term. I give out specific numbers every day that are different for the decent penetrations and the decent risks to my clients.
Sure.
Anyway, we're also up against this formation right here. So we're right at two more formations that could project this higher. This one right here at 378.60. And then the other one here at 381.40 minus 0.6 good tick per hour. Actually, those are going to come in right now at 378.50.
It looks like it's breaking out pretty good, doesn't it?
Yeah, and 381.10. So both of these I would get long above. If we break above either of them and back down through them, then I'd be out of all longs and short and looking for it to drop back down into these levels.
Okay.
And crude oil?
Yes, sir.
Rallying again here. I'm not going to go over all the higher time frame stuff. Just as a reminder to those who watch, a lot of this is just placeholders for longer term calls that I've made. But on the short term here, the trade back above 60.87, I brought in $3.11 coming into today, and then some more of that right here. That was the break right above this line. Then we got bullish above this line as well. That was the break above 62.19. And then we've broken above this. We've broken above this formation, which I did not have a long suggestion above. I just had it right here at 63.72. I think, but I would short below this if we would have fell back down through it, and that's going to come in at 63.71 minus 0.2 of a tick per hour starting at 1 o'clock p.m. Eastern Standard Time. And,
how does Brent look when you finish with crude? Could we look at Brent? We've had a request to take a look at Brent also.
Okay. Brent, similar situation here. We've been bullish from the break above this line right here, ran us up into this, and now we've just broken above this line right here at 65.87. If we were to fail back down through that line decently, I would get short, I would be out of longs and get short, look for it to probably dump down into these areas, probably down into the 64.27 area, if not more. But currently we're still bullish.
Okay.
And the RBOB rallying a bit here, just about to break out of two more formations at 207.68 and 208.60. They both decreased slightly, the lower one by 1.4 per hour and the upper one by 0.6 of an hour, starting at 1 o'clock p.m. Eastern Standard Time. And if we were to roll over and fail to take out this formation, that's going to come in at 205.08 plus 4.5 per hour. Wait a second. I think I just gave you the wrong number there. Give me a second. 205.08 plus 4.5 per hour starting at 6 o'clock p.m. And that would, okay. And then the heating oil And by the way, the RBOB is the laggard of the three. So when you look at your cracks, you can see the RBOB is going to be the laggard of the three. The heating oil is really the one that's leading the three to the upside. I'm going to take a look at the heat right now. And the heat is broken above multiple different levels in here. We got long above the trade above 202.22, which was the break above this line, then above here at 204.18, then more above here at 207.56, pulled back to it, and now we've just broken above this formation. By the way, the break above this formation projects us up with 3.5 cents minimum, 6 cents plus maximum. We detained 3.62 of that this morning, and now we got another piece of that right up to 213. But this formation also projects us higher. If we were to fail back down through this formation, that would warrant decent pressure, and I'd be out of all my longs at that point. That's going to come in at 210.40 minus 1.4 per hour, starting at 1 o'clock p.m. Eastern Standard Time. And we already went over the Brent, the gas oil rallying also. By the way, I said on all of these, you can see here, I said today has a good likelihood of seeing range expansion. Today has a good likelihood of seeing range expansion in all of these. And you're seeing already in the crude, we've already expanded on the day. Same thing with Brent.
I have a question about the Brent too.
Yeah.
Is the Brent still at a premium to the regular New York crude? It used to be a huge premium, but I don't even trade Brent at all. Do many people trade it? How is it a big open interest in the Brent?
Yeah, it's about $1.90 higher, trading higher. So right now the July crude is trading at 64.52, and the Brent's trading at 66.40.
Wow, it used to be $7-8, didn't it, at one time?
Yeah. I mean, it can really move sometimes. I used to analyze that spread. I haven't analyzed it in quite a while, but
okay.
So anyway, the gas oil there is rallying also similar to the heat, and that's broken above multiple different formations here, back up through here, and now this formation right here. Although this formation I did not suggest getting long above, wasn't quite up to standard as to what I would make a suggestion against. But nonetheless, if we fail back down through it, where it comes in at 620.14, 620.14 minus 2 per hour starting at 1 o'clock p.m., that'll warrant a decent pressure. Any questions on the energies before I jump to the S&P?
Let's go to the S&P. We'll be right back, Mike. We got to pay a few bills. Mike Moore, More Analytics, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, we're back, folks, with Mike Moore, More Analytics. Please continue, Mike.
Okay, I'm going to go over I'm going to go over the S&P, the gold, and the Bitcoin. And if we have time, I wanted to show your viewers something interesting with the cracks and the RBOB to heat spread. Okay.
Great. Looking forward to it. Please continue.
Okay. Yep. So the S&P 500 rallying up again here, made a new recent high of 60.25. I'm not going to go over all this overall stuff, but we've been, since just recently on the show, I've been bullish since 54.09 and a quarter. We detained 598.75 from that, and a little bit more than that today. And other areas we got bullish from 55.94. I'm not going to call them all out, but basically gotten long from multiple different levels up in here all the way up. Now, if we take out this line, actually, let me just check this. If we got a 30, let me just check something. Well, we didn't get a decent penetration there. So this line right here, which is going to come in at 60.0163 plus 8 per hour starting at 1:30 p.m. A decent break above there will warrant a decent strength and a likely run for the December highs. A decent break today is 30.25. If we were to break above there decently and back down through it decently, it would be a good shorting opportunity. And this line right here would be a good shorting opportunity to short below as well. That's going to come in at 59, 51, 87, plus 77 per hour starting at 1:30 p.m. Eastern Standard Time. And that would project this downward at least 70 points and possibly as much as 290 points. If we were to break below there decently and back up through it decently, that would be a good opportunity to get long again. Then it should run right back up and take out these highs. Okay, and then the gold. They're rolling over a bit here. Okay, we held exhaustion with a 32.69.10 low and rallied 158.6 up into here. And then I had a trade above 33.52. As the projects this upward 72 minimum, 225 maximum. We attained 75.7 of that. So we got the minimum. Said, however, we held exhaustion above at 34.29.40. With a 34.27.70 high, and I've rolled over 65.4 and a little bit more than that today. We're now in a bearish correction against this move up from 32.69.10. And We've also just broken below this formation, which projects this lower. That formation is going to come in at 33.61 plus 5 per hour, starting at 1:20 p.m. Eastern Standard Time. A decent break back above that, wherever it comes in, would be an opportunity to get long again and then have a look for a run for these highs again. And decent penetration in there today is going to be 17.5. But currently, we're projected downward. Further break below this line, or there'll be an additional sign of weakness. And the maintain gap lower on Monday would be a minor bearish reversal above as well. And then the Bitcoin, I said this is now bullish. We turned bullish overnight here because we've broken back above these two lines. But prior to that, I had mentioned on previous podcasts, I'm just going to scrunch this up and put it into a daily chart, so there's going to be wild lines all over the place. But basically, in this entire structure here, I think that this is the last stretch of this structure upward, and this may be starting a macro bearish correction against this move up, unless we run up and take the highs again, take out the highs again. But setting that aside, short term, I got bullish above these two lines right here, and then bullish above this line, which I said get long above 104.369. That was that line. And then if we break above this line right here, which is going to come in at 105.496, minus 27 per hour, starting at 1 o'clock. Excuse me, I had that at 6 o'clock. Excuse me. That's going to come in at 105.602, minus 27 per hour, starting at 1 o'clock p.m. A decent penetration above there is 1140. And I said a decent break above there will project this upward 5,200 plus per coin. If we were to break above there decently and back down through it decently, I'd be out of all long, short again, and looking for this to make a whole nother run to the downside, which could be extensive, at least this. Okay, so real quick, I just wanted to show you something about the, any questions on that before I go back to the
No, that's great. We're interested in your sequence coming now about the RBOB.
I just wanted to show your viewers the importance of some of these other dynamics in the market. So I have a sheet down in here called Seasonal Trends. And you can see here that in the product spreads, it said to sell the RBOB and buy the heat on June 3rd through 6/17. And you can see here on that spread that this was the opening of 6/3, and you can see how we've come off in that spread here to the tune of 1,785 per contract. And coincidentally, we also had a buy the heat, sell the crude on the same day at 6/3, or on June 3rd, and that was buying it right here. We popped up, rolled over, and now we're looking to head higher again. So both of these can be used in conjunction with one another. And how do they use to be in conjunction with each other? Well, it says here, since this suggested that the RBOB, the RBOB would be weak relative to the heat, and I also happen to break below a significant formation on that day. So you can pair both of those together to have a particularly vicious move. And it tells you at the very least that if you're going to be long, you'd rather be long the heat than the RBOB. And then since we already saw that the heat crack was bullish, it also says you'd rather be long the heat than the crude, and that it would pay you more on the upside, everything relatively being equal, to that of 1,300 or so.
That's putting the odds in your favor when you look at those statistics. That's what it's all about. Very good.
Exactly. So that's kind of like, when an energy trader looks at this, it looks like a lot of writing, but you really narrow it down to just a couple lines each day. And then you go down and look at these seasonal trends, and you pair that with looking at the spreads down below. And the spreads down below will tell you also specifically what I say in that spread. So, for example, in the RBOB, the heat spread, we held exhaustion way above at 583. and we've rolled over 1,100.
Okay. Mike, thanks for joining us, buddy. We'll have you on again soon, and keep your calendar open for us, okay?
Thank you, sir. I appreciate it.
You bet. We'll see you in 2 weeks, my friend. Mike Moore, More Analytics, folks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we'll get back to the Dow Jones here. Now, we went up and hit the number that we were looking at, 427.50, but we did not get filled. So what I'm going to do now is I'm just not going to call this a trade anymore. So we'll just leave it to the winds and not do anything with it now. It's still probably okay, but I don't want to take the responsibility, because if it gets back up here, maybe it'll go higher, maybe it'll go lower. It came very close within 4 pips, but that's okay. If we'd have gotten filled, I would have lowered my stop down already, but I haven't done that. Okay, so that's basically what we're saying right now. I have to show you what's happening in the cattle market, folks, because it is El Fuego. You're going to have to get ready to really get ready for barbecues, folks, because there's not going to be any meat to sell. Hold on, you can see it here. There's where we are right now. We're almost at the 1.6 weight expansion, this whole thing, which is at 120. Maybe we'll look at that come in Monday to see if it's going to do it. But this is a really strong move here. You can see here we've rallied 10 cents this week. I mean, mean, this was when we gapped up. If you remember, we said it was going there, and that's exactly where it's happening. So, and the hogs have continued to go higher, so we'll not mess with that. Soybeans are still doing nicely. Wheat's doing okay. The other stuff is all well. The euro, as you can see, still coming down, making new lows. And the bonds, they don't have any friends at all. You can see they just keep dropping and dropping. So the bond does not believe what's happening to the stock market, but that's the way they are. They're different folks. So you got to pay very, very, very close attention. The gold is also starting to move down, and it's still working down to the downside. So some of them work, some of them don't. The key is don't stand in front of it too long, folks. You don't want to be a deer in the headlights. That's the one thing that you don't want. That's the main thing that's really, really super important as you look at these things on stand. So live every day in an attitude of gratitude, and may God bless. Say some white light from my good buddy JT. And I love you guys. We'll see you on Monday. Our guest will be Norman Calls It to the Minute Winsky. We'll be seeing you then, folks. May God bless.